Welcome back. Today we're going to consider two less common data sets, the Passenger and Freight Transportation Services Index. And we're going to answer the question, which is the best gauge of the economy? Now, in the year 2000, they created two indices published by the U.S. Department of Transportation, the Freight Transportation Services Index and the Passenger Transportation Services Index. They each created at a level of 100. Improving conditions occur when the number goes up above 100. And it tracks the month-to-month changes in the freight industry and the passenger transportation industry, how much we ship to one another in terms of commerce, and then also passenger travel. Now, in particular, the passenger travel or transportation services index, we'll call it the passenger index. That has risen over time from 21 to present date in a very smooth trend to the upside. We can see, in fact, it rose from levels of 81 to a current 112. However, the freight index has not fared so well. It's a much more choppy chart. We can see we're currently levels of 139. It fails to surpass the higher levels of 140 occurring early 23 and then late 22. Now, the Passenger Transportation Services Index that's shown here with the histogram bars versus the freight in white, and we really see a stark divergence between the two. We can see that divergence really occurred around September of 22. For those of you that have been with us for quite a while, you recall we've spoken about the beginning of the inverted bond market, which occurred right around second or third quarter of the year 2022. And that caused quite a bit of economic turmoil, and that coincides with the beginning of the divergence between the two. The question is, why is the passenger index so much stronger than the freight index? And really, what does that tell us about the economy? Well, the freight index we can see over here, this goes back to the year 2001, by the way, overlaid with the S&P 500. Now, if you recall, in September of 2001, of course, the stock market went down quite a bit. It was accompanied by a moderate recession, not considered to be a very deep recession. But the very center of the events around 2001 really brought transportation to a halt, especially for consumer passenger travel, not so much for freight. And as a result, we see here the freight transportation index sank down to a level of 98. However, the passenger index during the same period of time sank to levels of 83, 15 points deeper. You see, the events of 2001 really affected passenger travel a lot more than freight. Conversely, we consider the events of 2008, the recession that occurred during that period of time, and we can see that the passenger index in this case sank down to levels of 108. Conversely, the freight index during the same period of time fell to levels of 95. The freight index was damaged more in 2009, the passenger index more in 2001. Well, the freight index is more closely correlated with the economy. You see, when we shop, we buy things online, they're shipped to us. That's representative of the U.S. economy. The transportation index, that's more representative of our disposable income, how much extra money we have to, take trips, airline travel from time to time. But the real economy is much more closely related to the freight, to the shipping, to the commerce that we conduct every single day. Now consider this under this light. Passenger index, shown here with the histogram bars. The white line shows us advanced retail sales of gas stations. Now it's important to note here that when the passenger travel index improves, gas station sales on a year-over-year basis sink. Well, this makes sense. When gas prices go down, we tend to travel more. When gas prices go up, we travel less. This makes sense. But we see here, when we see gas station sales overlaid with freight transportation, they have a positive correlation. You see, both of those indices are directly tied to the economy. When the economy is strong, there's more of a demand for gasoline and there's more of a demand for freight shipping. And that's why we see a positive correlation between the two. Now we see here passenger index versus the Philly Fed manufacturing. Really not a strong correlation at all. In fact, an inverse correlation. However, when we consider that we look at manufacturing just overall as a gauge, as a barometer of economic growth, you see manufacturing goes in the same direction as GDP. We look at the freight transportation index overlaid with manufacturing, we see a positive correlation. When the economy is strong, manufacturing improves, and so does freight transportation. Conversely, when one goes down, so does the other as well. So, what can we take away from all this? The passenger index outperforms the freight index. But we know the freight index is more directly correlated with the strength in our economy, with GDP, with commerce. And that really doesn't tell us, a lot good in that respect. However, the passenger index is correlated with disposable income. And we do have more of that lately, at least according to this. That's what the numbers indicate. In 2001, the passenger index fell down more than the freight index because of the events of 2001, more directly affected consumer travel and not commerce. Gasoline sales, well, lower prices indicate more travel. However, when we think about manufacturing, it's more closely related to freight and not passenger transportation. So, how can we benefit from this? Well, we look at the economic numbers and we look to levels of freight and transportation. Now, when freight improves, so does commerce, so does GDP. We'd expect the economy to improve. At the same time, we'd also like to see the passenger index improve as well, because that's also indicative that, our cost of living is good, that we don't spend a lot and we have a lot of disposable income. However, when there is a divergence like we see now, it shows us that there is commerce, but we don't have a lot of disposable income, which I think is a pretty fair representation from what a lot of us are going through right now. It seems like the numbers are going up, the stock market's going up, but so is our cost of living. So we're going to continue to track this over time, but just an interesting, different take as far as the economy is concerned. We hope this has been helpful. We look forward to seeing you back soon.